we we serve Diversity, Equity, and Inclusion Committee, who's bringing you this event today. The goal behind this meeting was to give you as much information as we could to help you be equipped and understand what's going on in this conversation of the NAR lawsuit settlements and what's going on and how that's going to impact you and your respective businesses. So the great thing that we are really excited about is we have some fantastic panelists here to share with you today. Some individuals you may not get a chance to hear from directly, or you may not get to see as often as you would like, but they are right in the middle of the trenches in this conversation about how things will be adapting and changing and giving us some best practices in this current market. So what I will do is I will introduce each one of the panelists so that you can understand who they are and what their area of specialty is. And they will speak. And at the end, we'll have Q&A. But what we're going to do at the very beginning is we are going to make sure that we go through the antitrust statement. So allow me to do this and make sure we're all on the same page. The West and Southeast Realtors of the Valley Association, or we serve, is devoted to improving the business conditions of its members and the real estate industry. Due to the nature of the association, we serve meetings and events often include real estate professionals and other industry stakeholders who compete with each other or work for competing businesses. We serve is committed to conducting all meetings and events professionally, ethically, and legally, adhering to all antitrust laws. And to that end, the topics for this meeting will focus on advancing the interest of members of We Serve and consumers of real estate services, increasing competition, reducing risk for all parties involved in the real estate transactions, and sharing insights on business best practices. The following discussion topics are always prohibited: agreements to fix prices, limit product or service offerings, allocate geographical territory or customers, and refusal to deal. Any discussion inconsistent with this policy will not be tolerated. All right. So without further ado, what I will do is introduce our first panelist. I'll give you his background, and then I will allow him to share with us what he feels is pertinent to this conversation. And that individual is Aaron Green. Aaron Green was born and raised in Tucson, Arizona. He graduated from law school at ASU in 1999, earning academic honors of law review as an associate editor of the Arizona State Law Journal. Aaron concentrated his legal practice on all aspects of real estate law. He served on numerous expert panels and taught continuing education classes to licensees for over a decade. So he's well equipped to bring us information here today. And beginning in July 2023, Aaron has taken on the role as General Counsel for the Arizona Association of Realtors. Aaron, thank you for joining us today.
Leah, thank you for inviting me. It's a pleasure to be here.
Absolutely. So when you hear the conversation, and I know you've been living, breathing, eating, and sleeping this topic for the last, I don't know how long, maybe a year or at least several months, get us caught up to date as to how we got here and what do we need to know?
Well, a couple of things. I kind of want to start off with the antitrust statement that you spoke about. Obviously this lawsuit has been settled, but it's not been approved by the courts yet. And again, we're being accused of conspiring to set prices and to artificially inflate prices that are anti-competitive. So especially when we come together in forums like this, it's really, really important that we remain diligent and really make sure that we really don't talk about what individual brokerages charge for their compensation or what we think folks are charging. It's just not appropriate. It puts a big target on our backs. We're not even through this lawsuit yet. And anytime there's competitors coming together in a Zoom forum like this or on a panel, there's lots and lots of social media threads coming together. Let's really try to avoid and talk about specific pricing. It's just not appropriate, and it is just a recipe for disaster. So if in this Zoom we can all talk about fruit and not specific pricing amounts or percentages, I would greatly appreciate it. it's difficult because we're talking about compensation and you need kind of like examples for it to make sense. But I think we can talk about, wanting to get paid a watermelon and only a grape is offered. I think everybody understands what that means, and there's no necessity to go into specifics. So apologize for that, but I'm a lawyer and I love the lawyerly stuff. All right. That being said, yes, a lot has kind of happened. I don't want to take more time. I want to give the panelists plenty of opportunities. But basically, the lawsuits have been settled. As part of that settlement, there's big practice changes coming to the industry. The biggest ones are basically there will be no offers of compensation on the MLS beginning soon. And also buyers, agents that are working with buyers must have a written agreement prior to touring a home, and it must include a ascertainable compensation amount, and the agent cannot get paid any more than the compensation amount negotiated from any source. And I know others will talk about that more in length. What I'd really like to talk to you about is how the association is trying to prepare its membership for these practice changes that are coming out. And specifically, we've been revising and creating new forms to help assist our members in this new world that's coming out very, very soon. I think we are up to 17 forms now that are going to be revised and or created that are coming out. We had a risk management committee meeting last Thursday where we approved 9 revised and new forms, and they will be having a special meeting on June 10th to consider 8 more forms. And again, these forms are meant to, number one, comply with the settlement, and also number two, it's going to be a very different way of practicing, a very new way, one with some uncertainty. So we really wanted our forms to have flexibility in all the different ways this might play out. So again, our membership has the tools to, provide for whatever may kind of happen or how different transactions might unfold. So I'm going to talk about just a couple of the most important ones, and then I'm happy to stick around and answer questions at the end. But the big forms, there's really like 5. So the listing agreement, the traditional listing contract agreements, the exclusive right to sell and exclusive agency, those forms have been revised. They've already been approved. In really the biggest change is that it's kind of flipping how compensation is discussed and kind of negotiated on the form. Before the revisions, the listing agent would negotiate kind of a total compensation amount with the seller, and then breaking out from that total compensation that the listing agent would receive, then they would talk about how much of that, if any, to provide or offer to a cooperating buyer's agent. The new form kind of goes in the opposite direction. So it kind of starts off with the listing broker negotiating what they're intending to get paid in just not a total compensation, but just what the listing agent earns. And then below that, there's opportunities to discuss and negotiate additional compensation. And the additional compensation would be if we're going to offer cooperating compensation to a buyer's agent, what is that amount or that rate? And that would be in addition to what the listing agent earns. And again, that would also be provided under the boilerplate form. That amount would also be earned by the listing brokerage as a dual agent. Again, you could always negotiate variable or something else on the additional terms and conditions section, but the boilerplate would just include that dual agency amount is the same as what's being offered for a cooperating buyer's agent. There's also an additional place where if the listing broker wants to negotiate or request additional compensation if the buyer is unrepresented. Typically unrepresented buyers, there's more work involved for the listing agent to help assist that buyer through the transaction and close. Again, this would be an opportunity to have a discussion with the buyer and potentially negotiate additional compensation for that amount. So again, it's kind of flipping things a little bit. It'll take a little bit of an adjustment to get used to the new form. Separate, kind of moving on to the buyer employment agreement. Now we have two. We revised the buyer broker exclusive employment agreement, again, to make sure it's compliant with the settlement terms. So before the BBEEA form had the negotiated amount for the buyer's agent or whatever was offered by a seller or listing broker, whichever amount was higher. That does not comply with the settlement terms. It just has to be a negotiated amount. So now we just have a negotiated amount. And again, because of the settlement, the buyer's agent can't receive any more compensation than what's negotiated. So any amounts offered or collected from the buyer's agent in addition to that amount would flow as a credit to the buyer, presuming that their lender is allowable. So again, the form has kind of changed pretty drastically to be sure it's compliant with the settlement terms. So again, that'll be a lot of education that needs to be promoted and understood and received by agents to understand how these things work. And again, I'm gonna end with all the timeframes of how that's going to be rolled out. So it's coming. But separately, there was a big push from our membership that, hey, besides the exclusive, buyers are not typically used to signing these things. We want to kind of have a less intimidating form that's not exclusive. So there is a non-exclusive option that is being called the buyer broker agreement to show property. And again, it's non-exclusive. So you're kind of, the broker or the members now doesn't really have a safety net to make sure they get paid. It's really tied to representing the buyer as indicated on the purchase contract. So if you use this non-exclusive form, the only way you're really going to get paid is if you are representing that buyer and listed on the purchase contract. Otherwise, you're kind of flying without a net, and there's no guarantee to get paid for your efforts. So again, it's a kind of a new rule with some new forms that's very foreign, and will take some time to get used to. Two of the forms that I want to talk about real briefly is, again, there still are offers of compensation in the new world. It just won't be on the MLS. So sellers and listing agents can offer buyer broker compensation. When it was through the MLS, there was an avenue to make sure you got paid as a buyer's agent. In other words, you could do arbitrations to make sure you got paid if you're the procuring cause. That won't really exist in the new world. So we've created what's called kind of a broker to broker form, where if compensation is being offered by a listing broker, a potential buyer's agent could send this form over to the listing agent and kind of solidify and make it a contract that the listing agent will provide that compensation if the buyer's agent consummates the sale and brings the buyer. So again, that's kind of a new broker to broker form. That form is still being finalized, but that will be available when necessary. And then the last form is if there is no compensation being offered by a seller or listing broker, and or you can't get a hold of the listing broker to get these broker to broker forms signed, we have a new addendum to the purchase contract where a buyer can specifically request from the seller to compensate their buyer's agent as part of the purchase contract. And that addendum has already been finalized and approved by the RMC and will be out. So again, lots of different things going on, lots of new forms. Here's kind of the tentative timeframes. The Arizona Realtors anticipate that we're going to get all these forms approved by the RMC and the executive committee in June. We anticipate that we will distribute these forms for use. We've been saying on or about August 1st. There's been indications from Armless that they are going to turn off compensation in the MLS in lockstep also on or about August 1st. So the new forms and compensation being removed from the MLS should happen about on or about August 1st. Sorry. It's been a long holiday weekend. So what we're really trying to do is make sure these forms are out and education is being rolled out a long time prior to August 1st. So we have a couple trainings that we anticipate will be coming out. We are anticipating in late June to have a brokers and managers forum, kind of like this, where we will have in redline all the new forms and all the revised forms, and kind of take brokers and managers through the forms and through kind of a schematic of how we anticipate things might play out. So that will be available in late June. Also in late June will be a training for instructors. So if you teach classes for any school in the state, you will be invited to attend this forum, and it will be the same thing. We also will be having a similar forum like that in mid-July for our industry partners. So lenders and escrow folks can attend those. And again, we'll try to educate them on how we anticipate things might unfold, so they can be educated on these new practice changes. And then also we'll be having kind of a special meeting, again, same sort of thing, also in middle July. And these will be for our leadership. So these will be for association executives and staff, so they can be fully informed. And also our board of directors, kind of a special training for them that's a little smaller, where they can also be educated and ask questions and make sure everybody is fully understanding. In addition to all of that, the association typically communicates with its members through the voice, which comes out every Tuesday via email, beginning in probably late June, the latest early July. Every voice will start having these revised forms come out, along with education, frequently asked questions, and best practices on how we anticipate these forms will be used, what they mean, and again, try to give our membership all the tools available so that they're familiar with these forms once the change happens. So I might have gone over my time allotment, I apologize. But that's where we're at. That's what we're anticipating to do.
Awesome. Thanks, Aaron. And I wanted you to start off first because you are in that conversation about forms and how they're going to be changing and when the rollout is. And we've got a couple of follow-up questions, but what I'm going to do is, if it's okay with you, if you're going to stick around, I'll hold it to the end just to make sure we've got time.
I'll be here.
Okay, awesome. All right. So our next panelist, speaking from their point of view about the industry and what's going on right now, is Mr. Butch Lieber. He is a fair housing instructor. He is a broker. He is a trainer. He's a real estate coach. Butch is an accomplished realtor, and he's got a 20-year track record of being in the trenches with the rest of us. His dedication to entrepreneurship has been a lifelong pursuit, making him a seasoned expert in the field. Not only is he a realtor, but as I mentioned before, he is a fair housing instructor. He is the immediate past president of the Phoenix Association of Realtors. He is the 2024 chair of the AAR Equity, Diversity, and Inclusion Committee, and he is here to share with us today. Butch, go ahead and unmute and enlighten us. How is this fair housing conversation?
Good morning. Thanks for having me here. Aaron, thank you for that. You could have gone another hour, I'm sure. You know, I think the reason they asked me to come talk about how the settlement is can potentially affect the world of fair housing and us as realtors in that. I think the bottom line, however the industry changes, however our practices change, we want to keep in mind that we need to provide equal service to all people. I'm concerned, I know there's a concern from a lot of people, that these changes that are coming could impact particularly lower income buyers, minority groups. The VA finally made a call last week, which was great, that will help veteran buyers. The issue is, you know, again, from my belief as an instructor and as somebody been in the industry, I think we will continue to see sellers paying for buyer agent compensation. I know the Justice Department doesn't want that to happen, but I think it's hard to break 120 years of history. And as long as sellers continue to pay, buyers won't have to come out of pocket. But there will be more and more situations where buyers will need to pay for their own representation. We understand as agents the value of representation for a buyer. And I think people that have purchased homes in the past understand the value of a realtor. So our number one job is going to be educating people, continuing to educate people on the value of having representation, not letting buyers go out by themselves. It's not as easy as buying as the Wall Street Journal would have you believe is buying a house should just be as easy online as buying a vacation, which we know is not the case. And so we have to make sure our buyers get representation. And there's three opportunities for us as agents to get paid from the buyer directly. And there are many buyers that are not going to be able to afford that representation. So we're then going to lean on the seller and hopefully the listing agent taking the listing, with compensation for the buyer's agent. We're going to have to get better at negotiating for our buyers to have their representation covered. But we want to make sure that we don't stop working with buyers who don't have the financial wherewithal to pay for representation. And that's where fair housing issues come into play. We want to make sure we're providing equal service to all and treating all people the same way when it comes to representation. One of the things that I heard in the NAR conference last month, I thought was interesting. There's a dozen or so states that have added veteran military status to their protected classes. And you see a lot of listings in the MLS that say no VA loans. In those states, that would be a violation of fair housing to discriminate against veteran buyers because we don't like doing business with VA loans. So imagine if Arizona had that law. How do we discriminate unintentionally against protected groups and unprotected groups in how we do business? And I think it's something we're going to have to pay attention to as our policies change and our practices change. I know there's more stuff, Leah, but we'll save it for Q&A later if there's more you want me to talk about.
Awesome. Thank you, Butch. You gave back some of that time Aaron took.
There you go. Yeah.
No problem, Aaron. I'm just messing with you. Okay. Excellent. Our next panelist is actually going to tie very well into what you were just referring to, Butch. Our next panelist is Mr. Mark Poisson. And let me just do a quick introduction for Mark. Mark was originally licensed in 2002. He had a quick start in real estate, winning Rookie of the Year at Diamondback Realty, and he never looked back. He began teaching, mentoring, and coaching realtors, eventually becoming team leader at Keller Williams in Tempe, Arizona, with over 300 agents in his office. If you didn't know Mark from that, Mark is a real estate instructor. He's taught thousands of realtors in his career and is passionate about elevating the professionalism in our industry. He's been involved in We Serve as a instructor for his own 10-week course called Set Sail. He's a 2012 leadership graduate at We Serve. He's a 2014 Mentor of the Year with Buffini and Company. He's 2015 Buddy Pilot Affiliate of the Year, and he was 2020 chair of We Serve's Professional Development Committee, and currently he stands as the 2024 president of VA Rep. So obviously when this lawsuit settlement or the whole lawsuit conversation came out, many of us raised the question of what does this mean to our VA buyers? Now, those of you that have been plugged into this information and seeing the different updates, you know that in May, the National Association of Realtors were in Washington, D.C., and there was a lot of conversation and lobbying, and the real estate legislative meetings took place. And since that time, there has been an announcement from the VA about how this is going to be handled, at least temporarily. So, Mark, please take the microphone and share with us from your perspective.
Thank you so much. And I got to say, I think my wife wrote that intro, Leah. So really in depth, but go leadership. We Serve 2012. For those of you that have been through leadership, you understand what I just said. So absolutely, VA, when this was first announced, our first thought was what's going on. A little bit about VA Rep and who we are. VA Rep is a national charter. VA Rep is an acronym, Veterans Association of Real Estate Professionals. And we've been around for 13 years now. And when this came out, I was on the phone immediately with Son Nguyen, who's the founder of VA Rep in Long Beach, and they were already all over it, composing a letter within the first week of the NAR settlement announcement to the VA to try to come up with something, because we can't leave our veterans behind when it comes to the home buying process. They need representation, and there were 1.2 million VA loans written across the country last year. That's quite a bit of home ownership. That this is a loan product that's been around since 1944. That the people that are eligible to use this, they earn that. They earn that by raising their hand and making a commitment to serve. So I was really happy to see that letter come out last week from the VA. And if you want to learn a little bit more about how that came about, you can. We want to thank the NAR delegates that were on Capitol Hill last week. There's a two-part video on NAR's website with an interview with the leader of the VA loan program for VA. His name's John Bell. Great little art, two-part interview, total about a half hour. I would totally recommend going through that, listening to that, because there's a lot of misconceptions still. I know Leah asked me to talk about some of the myths that are out there in our industry still. Butch, you mentioned fair housing. VA Rep, we have our annual policy conference in DC every June. We're getting ready to go back there right now, and we have already floated in specific HR bills to get veterans as a nationwide protected class, and that is part of our MOC, or Member of Congress, meetings that we have scheduled already. We are definitely pushing for that. We have VA Rep nationally on Capitol Hill. We're a powerhouse. They know who we are, and we've been able to affect federal forms, the loan application form, which is used by everybody across the board, regardless of what kind of loan that they are applying for. VA Rep is responsible for getting the box on there that says, "Have you served?" And since that has come into inception, the amount of VA loans have gone up dramatically since then. We are working on the VALID Act right now to make it mandatory as veterans apply for a loan. We want to see that it's mandatory, or mandate that loan officers show an actual side-by-side comparison from the VA loan, conventional loan, FHA loan, whatever type of loan product. We want to have our veterans educated. We want to allow them to make a well-informed decision. Sometimes maybe using a VA loan may not be the best decision for them, but the VALID Act would absolutely allow that veteran to make a greatly educated loan choice when it comes to that. If you don't know a lot about the VA loan, I use mine. I'm a Navy veteran myself. I used mine in 1989. I bought my first house. It was a new Continental at 89th Avenue in Union Hills, which is about a driver, if you like to golf, about a driver distance away from the WeServe office now up there. And I was 24 years old, making $8 an hour, fresh out of the military. And there's no way I could have come up with a down payment. So understanding the benefit of the VA loan, absolutely. I was that atypical LMI person, that low to moderate income person, that allowed me to get into home ownership, to start building wealth through home ownership, through real estate. That was my entry. And it's something that I've used many times over the years my VA loan eligibility, and I have been discriminated against over the years, solely due to lack of education about the VA loan buyer when it comes to purchasing a house. And VA rep, we do a lot of education nationally and locally to help educate and dispel a lot of those myths. Anything else, Leah, or do you want me to come back for the Q&A?
We'll come back for the Q&A, but I do want you to just clarify one point. In order to participate as a member of VA rep, you don't have to be a veteran, do you?
No, absolutely not. And thank you for that. And by the way, we are still looking for a membership director. I'm kidding.
I wasn't raising my hand. I was just, yeah.
I know, I'm joking. $99 a year. Many of our members are what we refer to as Patriot members to serve on the board of directors. 3 out of our 6 positions on the board of directors are veterans. So you do not have to be, you just have to have a passion for learning and educating. NAR has a great MRP is what it's called, Military Relocation Specialist. If you Google that through NAR, it's a self-paced course that you can go online and you could purchase through NAR, and you can learn so much more about how to serve the veteran community. But VA rep locally, we are the Phoenix chapter. If there's people from Tucson, we are forming a Tucson chapter. And we have a chapter up in Prescott as well in Arizona. So however we are across the country. Thanks, Leah.
Awesome. Thank you. Okay. So our next presenter, our next panelist is Ms. Jessie Wolnick. And Jessie, let me get her official introduction here, because again, some of these folks you may not have an opportunity to hear on a regular basis. Jessie practices law in the areas of real estate transactions, real estate litigation, arbitration, mediation, guardian and conservatorship, as well as probate. Bringing more than 24 years of experience as a licensed real estate broker to her practice, Jessie handles a variety of real estate matters, including quiet title disputes, deed fraud, tax lien foreclosures, partitions, and she assists brokers during audits or investigations by the Arizona Department of Real Estate. Jessie's one of those people that it's great to know. You hope you don't need her services, but good to know that she's the one that you can call on when you do. From 2015 to 2019, Jessie served as one of the attorneys for the Arizona Association of Realtors Legal Hotline. In 2020 through 2021, Jessie served as a subject matter expert for the Arizona Department of Real Estate to help craft the new real estate brokerage exam for the state of Arizona. And she serves as counsel for numerous brokerages throughout the state. Jessie Wolnick, please unmute and share with us the things that you think we as practitioners in the field need to know about what's going on right now.
That is a loaded question. Well, I can tell you I am getting a lot of phone calls from brokers. I think the biggest thing is knowledge for us. I am getting a lot of calls asking, what should we do? How is this going to change our practice? Can we get you to draft forms? And I just keep telling everybody, hold tight. It's all coming. I promise things are happening. As Aaron pointed out, I mean, gosh, 17 forms that the Poor Forms Committee has been plowing through. They are, I'm sure, working fast and feverish. I've had brokers call saying, hey, did you see this brokerage just put out this form? Can you do something like that for us? And honestly, I mean, I love that the AAR is working so hard for you. Let's see what they put out. Hold tight. And so I've been encouraging brokers to just hold tight, and AAR is working on forms coming out. So a lot of it for me is just education. AAR is getting out information as fast as they can, but with all the forms that they're having to create, Forms Committee puts out a draft, they put it through draft circulation, they love feedback, they want to hear what their members think works and doesn't work, and then they go back and they tweak things. To me, that's the best route because we're getting multiple input, multiple voices to put together a really good form. So while I appreciate that some brokerages have tried to jump the gun and get some forms out for their brokerage, I've not been a proponent of that because I feel like consistency is the key. The other thing I remind them is change is good. I have been told a lot of stories. I was not licensed, or I don't think I was licensed. I think it was just before me when buyer broker became a thing. We used to all work for the seller, right? Seller agency was all that existed, and suddenly buyer agency was a thing. And I know an attorney, Bob Bass. Any of you who know that name from long ago, Bob Bass is just a good guy, a great real estate attorney, and he'll share with you he was like blackballed for a good time, a good period of time, because agents were so worried and hyped up about what is this buyer agency thing and what is this going to do to our industry. And he was like, folks, hold on, it's going to be okay, it's a good thing. And he was just cast aside. What are you talking about? That's not a good thing. And of course Bob was right, it all worked out. And for me, that's how I view this. Yes, it's a paradigm shift, we've got change, but doesn't change keep us on our toes? And again, I think it's all good. I won't jump the gun. I know there's some other questions that you've got coming at me, so I'll hold off on plowing into why I think buyer broker agreements are good. But for those of you who heard, I've been a licensed real estate broker now. I've been in real estate 24 years. Got my broker's license right at year 3 as soon as I could. And so I've been in your shoes. I've done open houses. I've done many things. In fact, we served when they were SEVRAR. I was their grievance committee chairperson for 10 years, and seen many a procuring cause dispute or ethics complaint. And now on the other side as an attorney, where I represent many agents who want assistance in an ethics complaint or assisting with arbitration disputes. I think that procuring cause disputes are going to reduce, but there are other issues that will pop up in place of them. So lots happening. I think if you are a broker, the best thing you can do is just help educate your agents. If you're an agent, go to your broker. They're sponges. They're absorbing all of this information. AAR, as you heard from Aaron, is going to have numerous education opportunities. They're trying to make sure you are prepared. And again, this has been a short window for them, I think, with not much guidance from NAR. So AAR has been doing just a phenomenal job on trying to get as much as they can together for their membership so that you are prepared. So
Awesome. Thank you, Jesse.
yeah.
And I think the conversation for today is probably more focused on the individual agent than most of the sessions that we do, right? Because a lot of times it's the brokers in the room hearing this information. So what we wanted to do was make sure that the agents who are like, okay, I see all this craziness on Facebook forums and groups and YouTube channels and news headlines from legitimate news sources, right? That may not be quite as accurate as it ought to be. So I appreciate you all making this where the rubber meets the road for those of us that are practicing on a daily basis in this industry. Okay, our next panelist is Miss Cindy Reddy. Cindy Reddy is a facilitator and a national leadership trainer. She's been in real estate for over 27 years. She's a second generation realtor in the Phoenix Scottsdale market. She's associate broker and second generation women's council member. She's the 2024 president-elect for the Arizona Association of Realtors. She is past president as of 2015, president of the Women's Council of Realtors, 2020 past president of Scottsdale Area Association of Realtors. And there's like a whole list that goes down my arm of additional accolades of Cindy's experience in the real estate industry. In addition to all of her volunteerism and positions that she's held, she is still a full-time practicing real estate agent, and she has these conversations on a daily basis. So Cindy, what I wanted you to do, if you could unmute and share with us from your perspective on dealing with clients on a daily basis, talking to buyers about getting them started, doing those buyer consultations and getting them enrolled appropriately in the process. I saw Cindy. Lisa, can you see Cindy in the gallery?
I don't see her on the list of people.
I thought I saw her earlier. Okay,
I thought I saw her earlier too. I don't see her now.
okay.
She was
happy to-
earlier.
I'm happy to jump in on that topic if you like, though, Leah.
Well, let's do this. Let's roll to Lisa from Pinnacle Insurance, just in case Cindy's gonna jump on later. We can just use that time still. So Lisa Robinson, are you dialed into our session?
I am here.
Perfect. Then let
Yes.
me do a proper introduction for you.
Thank you.
Okay. Again, our goal was to have a wide range of perspectives because sometimes we get in these groups and we talk about this information and we hear from forums, but we don't hear from VA rep. We hear from VA rep, but we don't hear from fair housing. We hear from fair housing, but we don't bring in the conversation of how does this impact us on the insurance side, right? So Lisa, with over 35 years of experience as an insurance specialist, Lisa Robinson is president and owner of Pinnacle Insurance Consultants. She's dedicated to serving her clients, and this is reflected by the steady growth of her practice by providing optimal coverage both in breadth of coverage and competitive pricing. Her practice has grown primarily through the referrals of happy clients, premium volume and longstanding. Yeah, I said that right. Premium volume and longstanding strong relationships with specialty carriers have earned Pinnacle Insurance Consultants preferred status with many of the leading markets. This, along with in-depth knowledge of the field, has helped our team to provide our clients with high-quality insurance and proactive risk management at superior pricing, is how Lisa describes it. She is licensed as a real estate agent or broker in the states of Arizona, Texas, and Colorado. This combination of real estate and insurance experience gives Lisa a unique and unparalleled understanding of the risks and exposures faced by real estate firms today. Lisa, your perspective is different than anybody else on this panel. So please share with us what you think is timely about having this conversation. What do you think the biggest risk factors are? What's making your phone ring? What's changing on your side?
Well, thank you for having me. It's interesting. We end, all things always come down to E&O insurance, right? So I appreciate the opportunity to be here and speak a little about it. It certainly is challenging times. And it's interesting with the class action lawsuit. It's like, what changes are going on? What changes are going on? Well, interestingly enough, not a lot's going on with E&O insurance right now, or insurance, the insurance market in general. I think the news has trickled down slowly, not really getting to insurance carriers in general. Certainly E&O carriers are more aware of it, but this class action lawsuit is interesting because, you know, there's that, what I call the E&O myth out there. I've got E&O, I'm covered for everything I do. And that really is not true. There's, you know, a lot of other policies you need, policies vary greatly, but this is and I just want to have a disclaimer as well that this is not specific to any particular claim. Carriers make a determination of coverage based on the individual merits of each claim and terms and conditions of the policy. But this is more general comments of the allegations that the issues with the class action lawsuit and E&O coverage. The class action lawsuit really falls outside of the scope of E&O coverage due to certain exclusions that are in an E&O policy. First being, policies define what damages are, and damages do not include the restitution or return of fees, commissions, expenses, or costs. All right, this is a commission type of lawsuit. And so what we have typically seen in the past is when there's a commission dispute, it's typically not covered under E&O policies. All right, typically, here's the commission, who's gonna get it? All right, nobody's really losing, it's just fighting over commission. That's not typically a covered claim. That's the first exclusion that could apply. Secondly, violations of law. All right, even something like you guys have heard of the TCPA, a Telephone Consumer Protection Act. When you violate that, they sue you. Violations of law are not covered under an E&O policy or any type of insurance policy. And specifically, many policies include an antitrust exclusion. All right, so we've got that element in this claim. And third, that the lawsuit alleges that commissions were artificially inflated through adherence to the commission rule. All right, the definition of professional services covered in an E&O policy is that you're covered for professional services rendered as a real estate agent or broker to others. And this claim is not really in rendering professional services. It's more of you set commissions, you artificially inflated them. It's more about how you run your business rather than how you're doing your business. So it appears that it could fall outside of the scope of E&O coverage. Now, in this road that we've gone down with this class action lawsuit, there is potential coverage under what's called the directors and officers policy that is coverage that really addresses claims on how you run your business. All right, now you wouldn't be able to have the antitrust exclusion in there if that's an allegation you're dealing with. So what we're really looking at is that this claim is likely not going to be an E&O claim. All right, if there's any concern about, I talk about that E&O myth that I've got E&O, I'm covered for everything I do. And that's not the case, first of all, in that number one, there are different policies that you need for the risks of your business. All right, E&O is one. You need general liability insurance. That's super important. That covers third-party bodily injury and property damage claims, things like slip and fall at an open house, slip and fall at a closing, dog bite claims, turning on utilities in the house floods. Those are general liability claims. And newsflash, guys, you need that policy. And guess what? Although your E&O covers you as an independent contractor for work done on behalf of the firm, outside of that policy, you as an agent, as an independent contractor, need to carry your own coverage, particularly for general liability, because the firm's policy isn't going to cover you as an independent contractor. So you need to have that policy. And there's directors and officers and cyber and crime, so many other policies. So, we're seeing directors and officers was not a policy that people would carry, but it might be something that with litigation and how it's a crazy world we live in, it might be something you want to look to get coverage for claims that potentially address how you run your business. So, and the other thing to be aware of is when I talk about that E&O myth, not just other policies you need, but you've got a multitude of carriers out there that are competing to write your business, and policies vary greatly in coverage afforded. So it's important to not, what do we decide to, when we select a carrier, what are you deciding on? The primary issue is the cost, right? The cheaper, the better. Well, E&O policies vary greatly in coverage afforded. So when I'm working with my clients, and Leah was talking about, I don't know who sent that intro, but it was kind of going into that. We're drilling down on coverage. I need to know about my firms and what they're doing. Are they doing agent-owned transactions? You have builders, developers, you're doing business brokering, all these things to get them in the right policy and make sure they have the right coverage. So, the policies vary greatly in coverage afforded. That's come up. Jesse was talking about, what's making our phone ring. Jesse and I are dealing with a lot of this. And one of the issues that came up, and I'm sure you guys heard about it, is there was something went out about if an E&O policy, okay, you guys, this is if an agent, if if an agent isn't getting paid a commission or charging a fee, is there E&O coverage? All right. This will come into the definition of professional services that says you're covered as for rendering professional services to others as a real estate agent or broker for a fee. All right. If the definition of professional services says for a fee and you didn't charge a fee, they can deny that claim. Now, what I'll tell you is that most of the policies that I deal with, I don't have that exclusionary wording. I know one carrier that I don't deal with that has that wording. That's super important. We need to know that. We need to know that going forward. So that's a question I've had in my office. And when you talk about these policies varying greatly, that's going to be something in the future that we want to look at. Now, what are we looking at going forward? I think Jesse said it well. You know, we're waiting to see how things play out. And that's, Leah was asking questions about what changes have you seen? What changes have you seen? We haven't seen any changes in E&O because they're really, you know, it's really not come on their radar because these aren't covered E&O claims. What does that look like going forward? Well, first we need to see the forms and what we're dealing with going forward. I put out to some of my carriers, you know, give me some feedback on this. And you know, what does it look like going forward? A likely claim would be that the buyer broker failed to disclose commissions are negotiable and that, you know, they paid too much, right? Then the claim would be asking for a lower commission or that money back. That's as best as we can speculate going forward what it would look like. Well, if you're looking at the policies now and they define damages that does not include return or restitution of fees or commissions, then it looks like it could be outside of the scope of coverage. But we don't know how it's going to play out. And once we see the forms and see what this looks like going forward, we're going to be circling back to E&O carriers. And, you know, it might be something we have to push back on coverage, so forth, you know. So we've got to see. It's still unclear, as Jesse said. One of the observations I had with these new forms coming out, just keep in mind, all you guys that are out there, you know, I think it's realistic to say, okay, when the forms come out, oftentimes we see people not using the forms, right? They're still on the old forms, and, you know, how you deal with that is one thing, but you need to be aware that in your E&O policy, you've got some coverage benefits relating to use of standard forms. So if you don't use that standard form, you could lose some important benefits. For example, you can reduce your deductible on a claim where if you had a SPUDS, a home warranty, home inspection standard contract, or maybe waive out, but use of standard contract would reduce that deductible. You're not using that standard contract, you're not going to be eligible for that. Even more importantly, agent-owned transactions, that coverage varies greatly with carriers as well, and agents need to be aware of that. But many policies will say, if you're selling your own 1 to 4 family dwelling, then you need to meet conditions to have coverage on a claim. What are the conditions? SPUDS, you know, maybe a home warranty or waiver, maybe a home inspection or waiver, and a standard contract. So just be aware that I want you guys to be aware of using those standard forms when they come out, and working with the AAR and you know, Jesse, that we're using those, because you might lose coverage or benefits in your E&O policy. And then just one last comment, just in wrapping up and just kind of following what Jesse's comments about change. And I remember way back when, I remember Bob Bass, Jesse, and yeah, but remember when we didn't have a SPUDS, and, you know, we had to make that transition. It was like, oh my gosh, the sky is falling, and we got through that. And certainly challenging, and we don't know what things look like going forward, but you guys are resilient and do a phenomenal job. And we have great leaders and great agents out there practicing every day. So I know you guys will get through it, and it'll be a huge success.
Awesome. Thank you, Lisa. And the conversation came about because liability is important to all of us, and knowing what we need to do to stay current in light of this conversation is something that, a discussion that needed to be had. So I appreciate it. Next, we'll come back to Cindy Reddy, our 2024 president-elect for the Arizona Association of Realtors. Cindy, we had a great introduction for you and an overview of your bio. So we're just going to jump into what's the important part of the conversation that happens when we are dealing with our buyers and sellers right now in this changing market and the changing landscape.
Sure, thanks so much. And I apologize, you guys, for technical difficulties this morning, but I'm here and I'm really proud of the conversation that we're having today, because it is the issue of what's the real story and how are we dealing with it with our clients right now. And I'm out there selling real estate every day, just like you guys are. I have a team. And, you know, the main thing is just being upfront with the clients and not being nervous about having the conversation with them about this. I can't even tell you how many times I've had, you know, you walk in on a listing appointment and the first words out of their mouth is, so I guess I don't have to pay a buyer's agent commission now, and how, you know, explain to me how I'm going to save money. And so just having the conversation with them about the fact that this agreement hasn't been officially signed yet. I mean, it has been agreed to verbally, but we all know from history that the DOJ had an agreement with NAR years ago, and then at the last minute changed their mind. And so until it's signed, we don't know the full terms of what we're going to be dealing with. We have a good understanding, but we don't know everything yet. So helping the clients understand, I had one seller say to me, NAR must be demanding that you do business a certain way, otherwise they wouldn't have settled, and they must be telling you what forms to use and what to charge. And I'm like, no, that's not at all how this works, and it's always been negotiable. And, you know, just helping them understand what the real story is, I think, is the most important piece of this right now, and staying calm about it. We have been through the ups and downs of the market in many different ways over the years, and I've been doing this for 23 years, and we've come out better every time we've dealt with change, but none of us like change. So I don't know a single person that likes change, but it's just taking that step forward and getting used to the new forms. I will tell you that the forms committee at AAR right now is doing unbelievable work, and more work than they've ever done in a short period of time. And so the forms that are coming out are going to be great tools for you guys to use. And just as she said previously, you want to make sure that you're using the most updated forms. And I'll be the first one to admit, I really haven't been consistent about ever using a buyer broker agreement, because I do so much of my business as referral business. But I'm using it now, and you know, you just have to psych yourself into having the conversation, and then the clients don't argue about it. I haven't had any negative situations with the buyer broker agreement conversation. I think sometimes we're more skittish about having that conversation than the clients are. So, you know, if they don't know what they don't know, and we are helping educate them on the process and making sure that they understand that the commissions are negotiable. I think that's the biggest thing that we can do, both for our sellers and our buyers.
Awesome. Let me ask you this, Cindy, because we've got, actually now we're going to switch over to the Q&A portion of it, and which I'm going to come back to you as well, because you were going to weigh in on some of this conversation. So Cindy, if you could share, like, how do you introduce that buyer broker agreement? What kind of language is comfortable for you to use now?
So when I sit down with the client, before I pull out the form, I'm having a conversation with them about the market and things that are going on, and answering any questions that they have. And sometimes they'll ask about it. If they've been reading up on the news, they'll say, what is this whole thing about commissions? And we'll have a general conversation about it. And then when I pull out the buyer broker agreement and I'm going over it, I talk about how this is it's a contract between both of us, and that it outlines the details of what my responsibilities are and what the client's responsibilities are. And just helping them feel more comfortable about the process. And if somebody hesitates about it, which I've only had one buyer that was a little bit hesitant about it, I told them that I would do a 5-day, like I would do a clause that just basically says that after 5 days, we'll reconfirm the agreement, because I want to make sure they want to work with me and I want to work with them, right? We have just as much of an opportunity there to realize this is a mutual agreement, and the clients have been fine with that. So I've only had to do that once. Normally my buyer broker agreement is for a 6-month period. And then, with the option of renewing from that point forward. And really, once they understand the process, and then we even have to have a conversation about if there is no commission being offered on a property, do they want to see it and what that means to them? So as long as they understand it, and then when we find a property, I haven't had to show anything with a 0 in the number. So really what I'm doing is just saying to them, we'll have the discussion as that comes forward. So.
Okay, awesome. Hey, Butch, I'm gonna swing back to you real quick and let you weigh in on how conversations have changed, because you're also teaching in some of your CE classes the buyer broker conversation. What would you share?
Yeah, a lot of those. So thanks, Cindy, for that. Is great. Aaron mentioned earlier one of the new forms about non-exclusive buyer broker. Maybe not, if you're not on a contract, not going to get paid. But if you're not using a buyer broker now, that's how we've all been operating forever. We've been working for free. I think this change is a good thing for the industry. And I think for most agents, Cindy talked about having a conversation. And I think a lot of people may be sitting there like, what's the conversation I should be having? It shouldn't necessarily start off with the buyer broker agreement, right? How many of you, I'm not going to, many of you on this call, many of us as agents operate as Pop-Tart agents. A buyer calls, says, hey, I want to go look at houses, and you pop up and you jump in your car and you go show them houses. And then you get bitter later when they buy with somebody else. That makes you the Pop-Tart agent. Get it? Pop-Tart. Anyway, we have to stop doing that, right? Somebody calls now, we've got to sit down with them and say, let's talk about the process. What are you trying to achieve? Here's how I can help you do that. These are the services I provide, and this is what I charge for my service. And it's got to be a conversation that builds on our value and then gets to how much money we charge for it, and then the conversation of the buyer broker. Because if you sit down and say, hey, we have this new policy, you have to sign this before I can show you houses, you're going to have a lot of unhappy buyers who aren't going to want to sign that because they might not know you really well yet. And so it's going to require a shift of how we see ourselves as agents, and have some trust that you bring value to the conversation. And start each process with a buyer with a conversation, a consultation. Create for yourself, develop a consultation that leads you to the conversation of, this is what I do and this is how much I charge. And right, the same way any attorney would, any professional. You sit down, if you walk into Jesse's office and say, hey, I want to hire you, she doesn't say, here's my fee. She's going to listen to what you have to do and let you know if she can or can't help you, and then tell you, this is my fee for service, and you'll agree to that. And I think that's what we have to do as professionals. This change I believe, will elevate the level of professionalism in our industry, because it will force us to speak as professionals to our clients that many, many, many buyers agents have never done, because we just jump in the car and start showing houses and think that's our job. So that's my two cents on that, Leah. Thank you.
And, Leah, I'm going to jump in and add to what Butch is saying, just to confirm. I teach classes all the time to agents, and this is the one thing I think agents miss. You don't understand the knowledge you have, and I think you don't appreciate your value. As many times as I've been in litigation, and you're deposing a plaintiff or a defendant, and you're asking questions regarding the transaction, it becomes clear how much that client, that consumer, does not know. So I think you guys do take for granted the knowledge that you have, and that is important to learn. So as Butch said, you can feel comfortable for saying, hey, this is how much I'm worth, and I'm only going to work for this much.
No, great point, Jesse. And I appreciate the ABR class that NAR made available to all of our Realtor members to be able to sit through those classes to hear, again, how to state our value, how to position what it is that we do, how to introduce that conversation. And any of you who have not taken advantage of that yet, please do so. NAR is offering it complimentary to all of our Realtor members, and they've got multiple classes that you can take and select from. So whatever your schedule is, I'm sure there's something that you can pick on there. And it talks about the tools that you can use to state your value. You know, we always hear the value proposition. What's your value proposition? And it sounds great, but unless you stop and think about how that is in your individual business, it means nothing, right? So thank you for bringing that up. And Butch, you mentioned that buyer broker agreement and having it set for a term. Go a little bit deeper on the fact that you and your client can talk about what those terms or that length is. It doesn't have to be for 6 months. It could be what?
Could be a day. It could be, we'll go out and look today, and the houses I show you today, if you buy one of these, then, we'll work together or not. You could have it be a week. You could have it be a month. You could have it be a year. Again, these are questions for a broker to answer how they want their agents, but it has to have a specific start and end time per law for a employment agreement. So it has to have a specific period of time, but it can be renewed after that period of time. So, you can, for a buyer that's concerned about long-term commitment, you could have a shorter agreement. But that's all. I think if you present it correctly up front, as Cindy said, very few buyers are going to push back on a long-term agreement. If you start with a buyer broker agreement, good luck. You might get a one-day agreement. But if you start with value, if you start with what you're going to do, and here's what we're going to do together, and you build a partnership with your customer or your client to help them achieve their goals, then they'll be happy to sign a 6-month agreement because you will be their agent. Which we've never talked about before for many of us as buyers agents. So the conversation's changing. And with that, the better an agent gets at presenting their value in terms of serving their clients' needs, the longer they'll be able to get on their buyer broker, the more they'll be able to ask for. As I talk about in my class, you can be Spirit Airlines and charge very little, or you could be a private jet and charge a whole lot. If you can speak to the value that you have, the right clients will agree to pay you what you're asking for. So don't be Spirit Airlines, please.
And please also jump on the bandwagon there. Butch, you're a great segue. Thank you. I think also what is important is not just what your value is, but what a buyer broker agreement does for your client. Don't forget, there's 2 sides to that agreement. When I was a practitioner of real estate and I sold real estate for many, many years and have sold hundreds of houses, I always used a buyer broker agreement. And here was my paradigm shift. When I was chairperson for Sevrar, we serve, a complaint came in, and it hinged upon whether an agent interfered in an employment agreement. And so when we the grievance committee is like the grand jury. The grievance committee says, if this complaint can be proven as true, would it have violated the code of ethics, right? That's all we get to decide. And because the complainant didn't have an employment agreement, we didn't like what the respondent did. We thought what the respondent did was unsavory, but it did not violate the code of ethics because there was no employment agreement. That was such a learning opportunity for me. Thenceforth, whenever I did a listing presentation or a buyer presentation, I should say a buyer presentation. No, it was a listing presentation. Listing presentation in that instance, if you have an employment agreement, it's your listing presentation, But a buyer broker agreement, because the buyer's agent didn't have an employment agreement, there was no violation with the code of ethics. So we couldn't forward it for a hearing because it would not have been a violation of the code of ethics because there was no employment agreement. So I always told my buyers when I worked with them, hey, I'm going to ask you to sign a buyer broker agreement, and it protects both of us. Protects me this way, but it also protects you, because if you are in this exclusive agreement with me, no other agent can come in and do certain things. This guarantees our relationship. And whenever I explained it that way, how it also protected my buyer, hook, line, and sinker, every time they would absolutely sign that exclusive agreement.
Thank you. And listen, the chat box is blowing up with questions. So here's what I want to do. Before I let you go, Jesse, off of this topic, I want you to clarify the conversation about employment agreement versus independent contractors, right? How this language changes and what it means. And then I want to go back to Cindy, because Cindy, I want you to have a conversation with us about clarifying the client relationship versus customer relationship and agency, and how that needs to be explained in that value proposition piece. So Jesse, start with us about employment agreement.
Arizona law defines an employment agreement, and we address employment agreements under the statute of frauds, ARS 44-101, section 7 says, if you are a real estate agent, in plain language, if you are a real estate agent and you don't have an employment agreement signed with your client, you cannot proceed in trying to claim compensation that you believe you are owed. You guys hopefully all know the seminal case in Arizona, Young v. Rose. Young is an independent contractor. She works, quote, works for her brokerage, right? She's not defined by the IRS as an employee, but independent contractors do work for the brokerage. Young had taken Rose, an attorney, out looking for properties. They sign one buyer broker agreement. They sign two buyer broker agreements. They get to the third buyer broker agreement, and Rose fails to sign the buyer broker agreement. She fails to give it back to the buyer's agent. And then Rose walks into an open house, buys that property. Young goes, what the heck? I gave you 18 months of my life, and you're going to just ditch me like that. And I didn't get any pay for 18 months of working with you. And the court ultimately comes back and says, you are a licensed agent, you should know the law. And the law, according to 44-101, section 7, says you must have an employment agreement signed if you want to have a right to pursue compensation owed to you. So that is how we distinguish it in Arizona. An employment agreement is going to be a property management agreement, a listing agreement, a buyer broker agreement, some form of employment that says you have a right to earn a commission.
Awesome. Thank you. All right, Cindy, client versus customer, agency, buyer broker agreement. Where do you pull that into the conversation?
Sure. So as we're reviewing the basically the agency form, I always have a conversation about our fiduciary duty and explain that if it's a seller or a buyer that I'm actually talking to, that they are our client and we have fiduciary duty to them, meaning that they are our responsibility, that our focus is on their situation. And I try to put it in very basic terms of just, we are there to make sure that that they are represented, that we are there to represent them. And then when I'm talking to someone about the other party, for example, if I'm representing a listing and there is a buyer involved, obviously we are making sure that we are taking good care of the other party, that we are being honest and truthful and fair. But our true fiduciary duty is to whoever we have the agency with. And that could be a buyer with a buyer broker agreement. That could be a seller with a listing. So I try to keep it in fairly basic terms because they don't understand what we mean by a client versus a customer. They just want to know, how are we working for them? And so sometimes I think we get caught up in our own terminology and we don't think about it from their perspective. So I just want to make sure they understand what our responsibility is to them.
Awesome, thank you. And Aaron, here's where I'm going to pull you back into the conversation. Since you started at the top of the hour, of course, there were questions in the chat box. I don't want to miss the spirit of the question. So one of the questions we got, Aaron, was any specific updates from the DOJ? The other question that I got in the chat box was there's talk, I don't know if it's rumor or if it's based on any kind of fact, about the compensation that can be requested in the buyer broker agreement in terms to what the buyer agrees to versus what the seller agrees to. Clarify that for us.
Well, I'll answer the DOJ question first, and then I'm not 100% sure I understood the second question.
Okay, I'll come back.
Talk about that. So the DOJ, in a separate lawsuit, one that didn't involve the National Association of Realtors, a lawsuit called NOSELAC, had a settlement. It was basically a non-realtor MLS that had been sued, and they had settled the case. Any antitrust lawsuit settlement that is proposed to a court, the Department of Justice has an opportunity to weigh in if they would like to do so. So in the NOSELAC case, they did give what's called a statement of interest, and the DOJ requested the court to deny the settlement. And the basis was that they didn't feel like it went far enough. In that case, the settlement terms basically continued offers of compensation on the MLS. It just allowed you to put in zero, which already was allowed in realtor MLSs. And the Department of Justice says, we don't think that goes far enough. And what they kind of suggested is, what we really think shouldn't happen is there really shouldn't be anything offered on the MLS and nothing offered from the selling side to the buyer side. You know, the buyer can negotiate this directly with the seller, and we think that's the best route. And in support of that, they really pushed their rationale for it based on what they believe is happening, which is steering. So they allege that the reason to do this is because buyers agents are steering buyers not towards the best house for the buyer, but whatever pays them the most money, which obviously violates our code of ethics. With the new NAR settlement, we've kind of addressed two of the big problems with the DOJ. All compensation is off the MLS, like they requested. And with the requirement for buyers agents to have a written agreement with the buyer, and including an amount that the buyer is promising to pay the buyer's agent, we've removed any sort of motivation to steer, right? Because the buyer's agent knows what they're going to get paid by the buyer up front. And again, they can't get paid any more than that amount from any source. So we're confident the DOJ will be happy with the settlement. Whether or not they choose to make a statement of interest is obviously up to them. And again, they'd have to not just make a statement of interest, but also influence the judge to deny the settlement, which again, the judge in the Burnett lawsuit, which is reviewing this, has recently approved all the other settlements from Remax and Keller Williams and Anywhere Real Estate, and kind of indicated in that approved settlement that they kind of approved of the terms from NAR settlement. So we feel confident that the court will ultimately approve this. And from what I've been hearing, and this is unconfirmed because the DOJ won't come out and say anything literally, but we've heard that they're going to see how things play out, and we'll decide in October whether or not they want to approach the court with a statement of interest. So I hope that answers that question. The other question I wasn't 100% certain about, between buyers and sellers compensation. If you could repeat.
Yeah, I think you actually
that.
inadvertently answered it as well, because you said that, if our buyer broker agreement states what our compensation is from the buyer, in that we cannot receive any more than that, even if the seller has offered an increased amount. Is that correct?
That is correct. And I'll go into a little bit more detail. I mean, the settlement terms from NAR, they've come out. If you go to Facts.Realtor, they have, I think, almost 100 Q&As right now, or FAQs. So it's a great source of information. One of the questions, I'm just going to read it, is in the buyer agreements, can buyers and buyer brokers agree to a range of compensation? NAR kind of answers this kind of vaguely in that they say NAR policy will not dictate the compensation agreed between buyers and buyer brokers. It does say and reiterate that under the settlement, any compensation agreed to must be objectively ascertainable and not open-ended. And it specifically says the example of the range cannot be buyer broker compensation shall be whatever amount the seller is offering to the buyer. So we know those all for sure and certain. We also know in Arizona that we have to use clear and unambiguous language in our employment agreements. So we have these things in the backdrop. Obviously, I'm general counsel of the realtors. I don't give legal advice on what somebody else's form may or may not be lawful or settlement compliant. But obviously for Arizona realtor forms, we feel that we try to have forms that we believe are compliant and clear and unambiguous. And we usually preach best practices of how to conduct ourselves in general. So I anticipate that is what we will provide to our membership. Keep in mind, we don't require any of our members to use any of our forms. So people are free to use the forms that we provide. And again, we take pride that they're heavily vetted in numerous ways, and we feel that they're quality forms and provide good work product. But I don't think we're going to go beyond kind of what I just said, as lawyerly as it sounds, and I apologize.
Well, let me ask you this, because you just mentioned, the state association provides forms. So, there's conversation and speculation about brokerages that will not rejoin as NAR members, which means they wouldn't be AAR members, which means they wouldn't have access to the forms that AAR provides, if I'm understanding this correctly. And if that's the case, and if I'm a brokerage and I'm still a member, I've got a listing and somebody shows up with an offer, now what do? Do I send my clients to go hire an attorney to interpret all these other documents? How does that work?
So the answer is a very lawyerly, it depends. So a couple things though. Yes, AAR does provide forms. They are copywritten, and we are very vigorous in defending our copyright laws. So if we become aware of any non-members that are using them, then yes, we are very diligent about not allowing that. And we have sued people in the past. Now, that being said, we do give a limited license to our members to use them. So if you are a member and you are representing a client in a transaction, you are free to use our forms in your discretion. And the way that plays out is really kind of up to you. Let me give you a couple examples to kind of make more sense. You have an unrepresented buyer, because I think that's easier. Unrepresented buyer who has verbally said, hey, I'm willing to pay X amount of dollars for the house, and you want to facilitate that transaction. It's perfectly allowable for you to kind of consummate that verbal offer on a seller introduced purchase contract using standard forms, and provide that to almost as an offer to the buyer, so the buyer can accept that form. If the buyer handwrites something on a napkin and provides it over to you legally, if it has a specific and definite terms, it could be enforceable. And then you would have to try to counsel the seller of kind of, here's your options. you know, if it's a fantastic offer, maybe you just accept it. You might want to seek legal counsel to determine if the napkin is sufficient. Or, you know, we have fantastic forms available. Maybe you want to make a counter offer on our standard forms.
Not on the
So that
napkin.
you know what it is involved and how this transaction will work. And it's the same thing too, if it's a builder contract or a attorney drafted contract from the buyer, or if there's significant red line changes on a standard contract. But whatever it is, you know, your job is to act in the best interest of the seller and kind of give them options of what's available to them and help them navigate what the best decision is for them.
Leah, can I jump in on that?
Yes, ma'am.
So a couple things. Number one, be aware, I'm seeing some questions. I do a lot of policy and procedure manuals for brokerages. One of the first things I ask them to do is to contact their insurance carrier, because there are certain things they need to know before they will have coverage, which Lisa described earlier. Lisa had said most policies state you won't have coverage if it's not the state issued form from the State Association of Realtors or an attorney drafted it. So that's important to know. Use of the state forms gives you protection if your policy is going to give you coverage. That's part of it. You've checked off one of the boxes. You're using the state form. The second one, somebody said, is, well, what if we get an offer that's not an AAR form? Okay, we actually had that one year when I was on the legal hotline. Brokerage call says, hey, we've got this bizarro offer. We're not quite sure what to do with it. Of course, what would we say? Present it to the seller. Explain to the seller, here's an offer. This is not a state form. I'm not well versed with this document. I'm not an attorney. I can't interpret it for you. I can't give you legal advice. But here it is. Let me present it to you. And I strongly advise you to consult an attorney to get advice on this document, because again, it's not a state form. It's not one I've been educated on. And then what's the second part of that? Then you follow it up with an email. Dear seller, as we discussed earlier, we received the offer. I'm sending it through Transaction Desk or whatever format I use. Here's the offer I discussed with you. And again, I reiterate, I advise you to consult an attorney. Broker follows our advice. She submits the offer to the seller. Seller's advised to consult an attorney. Broker forgets to send the email. That documents she advised the seller to consult an attorney. Seller accepts the offer. 2 years later, it's an option contract. Seller goes to close escrow. Buyers exercise the option. They're going to purchase the property, and seller ends up getting about $50,000 less than what they thought they were going to get at closing. What does seller do? They sue their listing agent. And the claim the attorney brought was, you breached your fiduciary duty because you failed to advise the seller to consult an attorney. Now, ultimately, the seller gets an attorney, but it was too late, damage done. They had that window of opportunity to bring a claim. So that's the important key. You present the offer, you advise them to consult an attorney, and you document that you advise them to consult an attorney.
Leah, yeah, I just want to add something. Just to clarify, the use of standard forms with E&O coverage, it only relates to reducing your deductible or an agent-owned transaction. If you don't use a standard contract, you still have coverage. So sorry if there was any confusion there. Like Aaron said, you can write a contract on a napkin and it doesn't say. The coverage entirely is contingent on you using a standard form. There's benefits in your policy for reducing your deductible. The agent-owned transaction might need an attorney, a standard contract, depending on your policy. So clarify that. But if you're not using the standard form, that will not preclude coverage for your E&O policy from responding in general. Just to make that clarification.
Okay, awesome. Thank you. And here's what I want to go back, and anybody on the panel who wants to chime in on this, I'm thinking primarily it might be Mark or Butch or Cindy, but what's your response or what are your options if the buyer says, okay, fantastic, you stated your value, I understand how important you are to the conversation, I need you, I need you, I need you, but I don't have any money. I'm doing all I can to get, money for my inspections and my down payment. Now, where do you go with that?
I think this is Butch. So I think there's it's a business decision we have to make as an agent. So one, to explain to the buyer that there'll be a checkbox on the new form to not show the buyer properties where the seller's not offering the compensation to the buyer's agent. So you have written instructions then from your buyer not to show them properties where they'd have to pay out of pocket. Or you tell them, look, if we find a house, we'll do our best to negotiate the compensation in that agreement. And if we can't, either you'll need to find that money or walk away because then you cannot afford this home because this agreement says you'll pay me. So you'll have to decide as an agent, will you take that buyer on, knowing that you're going to have to negotiate. Again, for most agents, you're going to have to get better at negotiating, right? It's just one more thing to negotiate in a contract. And the buyer has to understand that, look, then if we can't get that negotiated, you may not be able to buy that home because you can't afford it. Because once you sign the buyer broker, that is a fee you will need to pay at closing. So somebody had a question in the chat about what if the buyer can't afford it when it gets to closing. It should never get that far with the buyer. No, they should know up front if they will have to come out of pocket to pay their agent or not. And that's just another factor to negotiate into a contract.
Right. I think, Butch, option number 3 is one more thing is that up front, I would tell my buyers that if this is the house for you and option 1 is you can't pay, option 2, I can't negotiate with the seller. Option 3, if this is the house that you want, me as your buyer's agent, I would walk away from the deal and you would no longer have representation. So just have to make that clear.
And that's a business decision that not all
Right.
agents will make, Mark. I agree with you on that, right?
Mhm.
That for some of us, it's like, yeah, we want you to get the right house. But for other agents, it's going to be like, nope, you got to pay me. You can't have that house.
Right.
And that's a situation we've never been put in before. It's going to be a challenge for people to how will you handle that situation to stand between a buyer and a house they love. So I'm with you on that.
Awesome.
So the other thing, just really quick,
Yes.
I mean, none of us have really had to deal with that yet, or at least not that I'm aware of, but the other thing is the buyer's going to have to make that determination fairly early on as they're negotiating the deal with that house, because you get too far into the deal and they're through inspections or whatever, and then the buyer's saying, I want to cancel because of the commission issue, it's too late. So we all have to be really aware of how early on that process is going to have to happen so that the buyer understands what it is going to cost them to get the house, or if they have to step away, or if the agent's stepping away. That's all going to be much earlier in the process.
Okay, great. And here's a question in the chat box.
I'm
So
so
the
sorry,
question
can I
was, oh, yeah, Aaron?
jump in real quick? Again, I just to echo everybody else, earlier in the process, the better. And even with a pre-qual, maybe talking to their lender up front, what is available, what's achievable. So the earlier, the better, I think.
Awesome. Here's a question from the chat box. It says, this is from Jerry. It says, we need to be able to tell buyers how much they need to pay if you show them a property. And we all know how many of our realtor colleagues answer the phone and return phone calls. So how will we find out how much a seller is offered to pay prior to showing a property? How does this really become something that's practical?
I keep believing that someone will come up with a very creative solution for this. Realtors are very creative. It can't be on the MLS. So I suspect most brokers will have their own website that promotes what they're offering on their own listings because that is acceptable in the settlement agreement. I believe ARMLS has determined, it's not final yet, that they're going to allow a link in private remarks to a brokerage website that would then have to have a second link to a page that would show compensation on a listing. It would be 2 steps off the MLS. They feel that's in alignment with the settlement. That may be coming. And I think I've heard my best answer so far is sign your commission agreement, compensation agreement, and leave it in the property itself. So when a buyer and a buyer's agent are showing the property, they can pick up that agreement form. It creates its own liability issues there if there's no expiration date or something on there, but leave it in the property so you can get it when you walk away. And the last solution is listing agents have to answer their phones.
Right. So true.
Okay, so here's the next question I see in the chat box. Noel said, I'm a little confused about all the negotiation rules. Are buyers agents negotiating their compensation before they make an offer or in the offer, or can it be either one? Will this be covered by one of your 17 new forms, Aaron?
Yeah, so again, the forms are meant to give flexibility for different situations. So if a buyer's agent is about to go, show the property to the buyer, they can look for the listing broker's website or some other communication where there might be some sort of an offer. They can send the broker to broker agreement to the listing agent to kind of consummate that amount so that they have it kind of upfront negotiated. We're getting X amount of compensation that might or might not cover the full amount that's owed by the buyer, or it might be in excess thereof. So again, those are possibilities. And even if they get that, if it's not sufficient to pay for the entire buyer agent compensation, the buyer will have another opportunity in the purchase agreement in the offer to request that additional amount in the offer. Or again, if there was no offer of compensation, they could request the whole amount in the offer. So there's flexibility in different routes to get those the buyer agent compensated by the seller or the listing agent at or before offer.
Okay. Now I know these drafts of the forms have gone out to a group of brokers in the industry. I don't know how you get on that forms review list, but I know it's been out and they send out the red line version so that we can give feedback to the forms committee and the risk management committee. Is there going to be another round of those coming out, or that's been done and now it's just going to the final review for risk management?
Yeah, so it's called the Loop, and the Loop is approximately 5,000 of our members. And anytime there's a proposed new form or revision to one of our forms, we send it out to the Loop for comment. And the typical process is usually we have like one work group at a time, and it's a 6 to 9 month or multi-year process to revise one form. Obviously, that didn't happen here because the settlement came out March 15th, and we don't have very much time. So we've been looping like crazy and revising like crazy. And it's really, typically we have almost a finalized form before it gets looped. We've not really been able to do that with the time constraints. So we have, I think, 2 of our last forms that are being looped currently. If anyone wants to be added to the loop, they can just send me an email. We're happy to do so. They do have to be a member. But just keep in mind that, and if you've seen these revised forms go out and new forms come out, there might be significant changes before they're actually approved. And it's just because with the time constraints, we've had to, meet once and loop it kind of as is, just to get it back soon enough so that we can have the work group look at all those comments and finalize the form prior to the risk management meetings. So again, if you've looked at some of these revised forms, it doesn't mean that's what they currently look like. There's been significant changes. But if you want to be a part of the loop going forward, please send me an email. But the forms that we are revising, I think there's only 2 that are currently out for the loop comments and suggestions at this time.
Awesome. One of the questions that came up was, how does this impact dealing with builders and having your buyers in a buyer broker agreement and being compensated as a buyer's agent when you're working with a builder? Anyone?
I think that depends on who the builder is. Some builders are not members of the Association of Realtors, so they may not have to comply with that rule. So that's the first question is the builder an AAR member? If they are NAR member, if they are, then I think they have to determine the circumstances. NAR came out with a frequently asked questions page. I believe, Aaron, you can correct me if I'm wrong, but there was a discussion about, well, what if a buyer walks into an open house? And NAR said, if they just walk into the open house, you don't have to sign a buyer broker agreement. But I think there's a certain point when you pass and it's become perhaps implied agency. If you start giving advice, asking questions, or going to tour property, then I would think you need a buyer broker agreement.
Thanks, Jesse. Question, and I'm trying to catch the questions in chat box. You guys are firing them up. I appreciate it. And Jesse and Butch are jumping in to help answer some as we go. So what are some of the ways that listing agents will be able to let us know what the compensation is that the seller is offering? If we can just get somebody to just give us a couple quick bullets on that.
Well, I'm from my perspective as a listing agent, I'm going to say really what Butch said is completely accurate. I hadn't even thought about leaving a piece of paper or a commission agreement on the, at the listing. I think that's a good idea. If we have a home book or something there that we can display that, in addition to answering my phone, which I always do, and also making sure that our brokerages have their own page. So I think, at least from my perspective, I think that's going to be our best solution. I'd love to hear some other suggestions though.
I've had calls from brokers. Brokers have asked, can we put buyer broker, yes, buyer co-op, something on the sign writer? You can put it on a flyer. I'm sure technology is even better than when I was a practitioner, but I used to have the talking house, right? The short-term radio inside, so they can pull up and tune into whatever 1510, and I would be able to recite my, and I could then say, yes, we do offer a buyer broker co-op commission. If you leave an offer of compensation inside the house, be careful if you're signing it, because mistakes happen. I recall, and I think I wrote an article, it's on the Legal Hotline archive still, an agent had used an HOA addendum, which, right, seller fills out page 1 and signs it, and by e-sign, they had accidentally auto-populated the signature to page 3, and then the buyer filled in what they wanted, which was, hey, seller, pay all the HOA fees. And then they tried to argue they had an agreement. So if you leave a signed commission agreement in the house and you've offered whatever percentage, if they sign and accept it, you have to make sure no change has been made. Be careful. I worry. I warn all the time. We're all using these little smartphones and they're tiny, and I may have missed that they changed the amount of compensation. So as far as a risk management view, that makes me a little more nervous of leaving it pre-signed, but at least you could leave it in there with the amount offered, and then all they have to do is sign it and return it to you, and then you could sign it. So I like all those ideas.
Awesome. Aaron, here's a question for you. So, this is ongoing and things continue to change and we continue to get updates. So if we've got listing contracts and buyer broker agreements right now that extend past August, what should we do? Are we looking at rewriting those documents after the official forms come out and the official date for DOJ?
Yeah, so I mean, in NAR, again, on their Post-NAR Realtor have this as one of their FAQs. As long as it's compliant with the settlement, you don't need to re-sign listing agreements. And again, our current ER, mostly complies with all those. So I don't think it would be a requirement to get a new one. Obviously, members could choose to do that if they wanted to. The buyer broker is a little different because the buyer broker currently, the BBEA, says this amount or this amount, whichever is higher, which I think is potentially problematic. So I think it might be one of those things that, and again, we're kind of working through all these issues in anticipation of August 1st. We'll have better guidance for you as we get a little closer. But I think it might be problematic to have a regular BBEA with a long-term expiration date or termination date after the settlement terms, if that issue hasn't been addressed in the current one.
Awesome. Another question I see in the chat box is, as we are as realtors allowed to ask for proof of funds for paying us so that there's no surprises at the end?
You're
So
asking, is that lawful or a good idea?
So if the question is, can we ask for proof of funds as far as getting paid our compensation? And also if someone wants to weigh in on the conversation of retainers.
So a couple things, retainers have been allowed in both the employment agreements and will continue to be there. Again, we're trying to show more consumer choice and more negotiability. So there's a little more flexibility in those, if they can be credited towards final compensation or not. So those are going to be available in all the forms. And as far as negotiations, I think all of that is fair. I mean, again, negotiability is good, and it's good to have the discussions. So, I mean, one of the things that came out at the Sitzer Burnett trial was that employment agreements were just pre-filled in, and the client was told, hey, this is it. There's no negotiability. Everybody charges the same thing. You take it or leave it. You know, all that stuff is not true, and hopefully that is something that occurred, 6 years ago in Missouri. But again, the point I think everybody's been talking about this is you sit down with the buyer, just like you sit down with the seller. What are your objectives? What are you looking to do? Do you have the ability to pay out of pocket? Do you not? I guess in theory, the buyer agent could say, well, show me your checking account right now, because I want to make sure before we sign this that you've got the money. Obviously, once the agreement is signed, you can't ask at that point because you're already contractually bound. So I think this is a discussion that needs to be done upfront of, are you a VA buyer with no money? Okay, well, here's how I typically do it. Here's what I'd like you to sign. Here's how I think we should handle that situation. And hopefully the buyer consents. And then once you've all agreed to the terms, then you're going to put down the terms on the employment agreement and move forward with it.
Real quick follow-up to the question, Aaron, when it comes to the retainer fee. Will the final forms, Aaron, have a cancellation option for either the agent or for the buyer? Is there any ways that is that been added back? I know it wasn't in the draft.
Yeah, so there is no cancellation availability on the employment agreements. However, the current listing contract addendum, that really is just all blank, you just fill it all in. That has been kind of revised to be a general employment agreement for all employment agreements. And it's going to have some of the most frequently, or we anticipate it's going to have a lot of the most frequently used terms available in there. And that will be the termination date. It can be moved up or moved back. Cancellations, either mutual and also mutual with different terms for that cancellation, and also compensation. So those will be more of a click box. Here's how we're going to handle it. And there will also be room available for additional terms and conditions that can just be written in. So we anticipate cancellations could be facilitated through that form rather than just on the contract itself.
Awesome. So I knew there was going to be a bunch of questions to come up, and I appreciate all our panelists for sticking around for the entire time. And I appreciate all the questions in the chat box. We didn't get to all of them, but we got to a lot of them. So what we're going to do with the last 10 minutes is we're going to allow each one of the panelists an opportunity to do a little 2-minute recap of any resources or tools additional resources or tools you want to share. I see some being added in the chat box where agents can continue to be informed and updated about this. And any last remarks about the overall conversation that we can have as takeaways. And before we do that, I just want to thank all of our panelists for participating. I want to thank the Diversity, Equity, Inclusion Committee for bringing this conversation to the table. If you're interested in participating in the committee, our chair-elect is Mr. Paul McFarlane. Paul, if you would put your information in the chat box so they can reach out to you if that's the case. And with that, what we will do is we will allow each one of our panelists to share. And I'm gonna go ladies first. Ms. Lisa Robinson, if you would like to share your final comments for us.
Certainly. So I think, I pretty much addressed the class action situation, but I know I was asked, what about protection for you guys as agents, and the firm policy covers the firm, and how do you best protect yourself? And I just wanted to touch on that a little bit from the standpoint of what you need to know, being that your E&O coverage is with your broker. And we talked about all these E&O policies very greatly in coverage afforded. So sit down and, if you're concerned about that, sit down and talk to your broker owner and make sure they're informed on coverage details of E&O, because that's going to fall, that's your protection. If you don't have a good policy, then you guys are exposed to an uncovered claim, and that's super important. And, hey, we know it's litigious out there. You don't have to do anything wrong to be sued. At a minimum, 50 to 70% of the cost of a claim is attorney's fees. At a minimum, it's probably 20, they're saying the average claim now, just to defend out if you did nothing wrong, is $30,000 to $50,000. That's a chunk of money. So you've got to make sure you've got that protection. So, talk to your broker about the details of coverage. If you're doing certain types of transactions, make sure they're going to be addressed in that policy. What I want to, that's super important for you to know is, we talked about that E&O myth. I've got E&O, I'm covered. Well, here's the reality. You're an independent contractor doing your own things. This E&O policy covers you for the transactions you're conducting on behalf of that firm. What you do outside of that, if you have other businesses, if you have other LLCs and you're doing different things, that's not going to be covered under the firm's E&O policy. You need to get your own coverage for that. You need to have an insurance broker and get your own coverage for that. We talked about the fact that agents are covered under the firm's E&O policy as an independent contractor for work done on behalf of the firm. Outside of that, that general liability coverage, we are seeing more and more claims than ever. We're seeing more general liability claims, these slip and falls at open houses and showings, things that are we've never seen in the past. These dog bite claims or turning on utilities and house floods, and the firm's general liability policy doesn't protect you as agents. So, make sure you get your own general liability coverage. Cyber is very specific if it's going to extend to independent contractors that are working on outside email accounts, because you don't typically work on the insured's operating system. So, make sure as an independent contractor, you're knowledgeable on what you've got with that E&O policy. If you're doing a lot of agent-owned transactions, buying and selling your own properties, that's very specific in E&O policies. And you can just ask your broker about those transactions to see if they know if it's covered, because they will. And when you look at policy broker.
Hey, Lisa, I'm sorry. I'm gonna have to cut it because
Okay.
we only got a few more minutes, but I appreciate it. So you guys can see that there's a lot of context that has to go on here. I'm gonna say, Lisa from WeServe, if you could capture the chat box and make sure that we capture any questions that we did not get to during this time, that we can send out something to our participants after, that would be great. So if you guys got a question that you didn't get a chance to get in yet, type it in, drop it in the chat box. Jesse, did you want to add anything for parting comments?
To all of the real estate practitioners, the one thing you need to take away from today is you are in charge of your own destiny. You are going to make these new terms help you become a success, or you're gonna, sail away. If you are a listing agent, you need to help your sellers understand what the benefit is to offer a co-broke, an offer of compensation to a buyer's agent. If you are a buyer's agent, you need to create a phenomenal buyer's presentation so they understand the value that you're going to bring as a buyer's agent, and the what a buyer's broker agreement does to protect them. So you are in charge of your own destiny.
Thank you. Cindy, parting comments?
Sure. So I just want to say to everyone, be the professionals that you all are, especially everyone on this call, and help other agents do that within your offices as well. We have to be communicating with one another, and we have to stay up on what's happening. So there is a website, facts.realtor, that has great information and up-to-date information that you can look at every day. And then NAR also has a couple of things on their website, like 179 things that a realtor does. So you don't have to make up your own list of everything you do. There's a lot of resources on the NAR site, and just know Arizona Realtors has your back as well. We're doing everything we can to stay up on this and make sure you've got the forms that you need. But know your worth and show it to your clients. That's my recommendation.
Awesome. Butch, parting comments?
Yeah, stay educated, get educated. Somebody asked earlier if there'll be required classes for agents. No, but you should take as many classes as you can find from different instructors to get different points of view on modifying your business. Like Jesse said, you're the only one responsible. We can complain about how it is. We can complain that, what we were getting more transparency is now less transparency. You can complain about it, or you can make changes to your business. And, complaining isn't going to solve anything. It is what it is. How do you be better? How do you be better and build your business and educate and make more money down the road? Because this is a good thing for professionalism in our industry. And as Cindy said, there's great resources at NAR. There's also great resources at AAR. AAR is doing a phenomenal job of putting forms together and keeping you educated. If you don't get emails from AAR, you may have unsubscribed in the past. Go back online and resubscribe to The Voice so you can stay up on things as they happen. So stay educated.
Awesome. Mr. Mark, parting comments?
Absolutely. I have some parting comments, and I promise to take less than half hour. When it pertains specifically to veterans, and just understand, VA rep, we're working tirelessly through this whole change, not just this change, everything nationally to help our VA loan product and our veterans as they go through it. My recommendation for you, if you want to work with veterans, understand how to serve them. And you can serve them better by understanding the VA loan product. Going back to what Butch just said, education. Make sure that you educate yourself on the VA loan product, and don't be one of those realtors out there that still hangs on to the myths that are out there about the VA loan product. It's the most performing loan that's out there. 80% of VA loans, once they go under contract, close. So one of the myths is since it's 100% financing, there's not a large down payment, so they don't have a lot of skin in the game. I would argue to say that the veteran has more skin in the game than anyone out there, because they raise that right hand. So VA rep, I'll put my information in the chat if anyone has any questions afterwards. Leah,
Awesome.
thank you.
Thank you. And thank you for your service, and to all the veterans on the call. Okay. We started with Aaron. We're going to wrap up with Aaron. Aaron, give us your parting comments. Anything that you want to share that you haven't already?
Not really. Just want to let you know your association cares about you. We're doing our best to get you prepared as humanly possible. Nobody likes change, and it's uncomfortable, but at the end of the day, buyers want representation. They don't expect you to work for free. I think this is just more about communication and letting them know, hey, here's how it's going to work from now on. But I do anticipate that buyers are going to continue to want to be represented, want you to get paid. And again, the same thing with sellers. The sellers want the biggest pool of buyers available, And that includes buyers that don't have the money to come out of pocket to pay their agents. So we will get through this. We will get through this all together. And hopefully we can look back and thought it was a lot bigger of a deal than it actually ends up being.
Awesome. Thank you. Thank you, everyone. It's 12:01. We didn't quite make it on the nose, but we did good and we covered a lot of ground. Again, the questions we'll capture as much as we can from the chat box to get back to you with anything that we didn't address so that you'll have that information. We could have gone on for another couple more hours, but time did not allow, and you guys wouldn't sit still for that anyway. So again, on behalf of the Diversity, Equity, Inclusion Committee from We Serve, thank you, everyone. Have a great day.